Welcome back. My next guest, he's an optimist, and he invests in that theme. His notes are a great window into what he's thinking about in these markets. He says these markets are already betting on a resolution in Iran, even though that blockade initiated by the U.S. President Donald Trump is still kind of in its infancy. He states that it means they're functioning normally, or at least as normally as possible right now, absent any news from Islamabad. Now, higher oil prices yesterday finally gave way to higher equity prices. That's about the third time in the last few weeks that that's happened. Normalcy, here we come, right? He says he's watching these three stocks right now, JP Morgan, ASML, and Netflix. So let's get him on for more of it to hear what he's got to say. Please welcome into the show Mr. Keith Fitz-Gerald. Keith, thanks for being on. I know he's got some bad weather up there in the Northwest, so he's going to hit us with the phone. Great to have you on, Keith. What are your thoughts, brother?
Thank you. We do. We've got one of these northwestern storms and scattered power, the privileges and curse of living on an island at the same time, right?
Exactly right.
I think we've got, the S&P is marching higher. It's, wiped out the Iran war losses. So all the things that we've been talking about, investing in the midst of chaos, still play true. And I think that as certainty returns, then that's going to give lots of investors confidence. Hopefully they hung to it, because those that bailed out are going to be risking getting caught on the sidelines, Scott.
I think that feels like it to me a little bit here today. We had some research came through. Everybody talked about this, how the S&P has taken back all of its losses and then some from the Iran war. That's great. And we had yesterday, JP Morgan, Goldman Sachs, and HSBC all came out saying they feel, basically saying, I'm paraphrasing, but the water is warm and it's now time to get back in. They probably already bought, I'm sure. That's why they're having you buy now, because they got in before you did. But still, it feels like that we've kind of made a little bit of a turn here. And it looks as though, again, the S&P 500, I just checked, close to 7,000, if not over it. Those are all good signs, aren't they?
Well, they are, and this is an important shift in psychology, because when you have good news, it's actually good news. You also have confidence, and confidence, I think, is going to be important, because this is going to be one of the most influential earnings seasons we've seen in a while. If growth is what I think it's going to be, we may be 15, even 19% this quarter, which is going to catch a lot of people by surprise.
Especially those that went to the sidelines, number one, or those that are still thinking that we're going to have a better dip to buy some stocks. So, yeah, you're right. Let's talk about that. Earnings look to be great, 15 to 20%. We've got margins that are really good. We've had some big banks report yesterday and today, all really good numbers. It's still starting to feel like things are kind of going in the right direction that way. You're looking at three stocks, I think ASML, JP Morgan, and Netflix. What are you looking at there?
Well, ASML is really interesting, because that tells later this week, and what we're going to see there, it's their order book that's key. They make the ultraviolet lithography machines. They're the best in the world. Every single thing. If we talk about picks and shovels when it comes to AI, they're the shovel maker. And so their order book, if it's strong as I think it's going to be, then that presages AMD, NVIDIA, lots of other chip makers having a really solid run. JP Morgan is going to be all about the credit quality. I think the numbers, they're going to have probably banner numbers in terms of trading itself. But what I'm going to look for is the stuff between the lines. What does Jamie Dimon think about credit quality? Because private credit, private equity is really a big deal right now, at least in the headlines anyway. And I think not all cloth is cut from the same, die, so to speak, whatever that expression is. So it's going to be separate. You're going to have to separate the best from the rest. And then finally, Netflix is going to be important, because the ad spend is running. Now, I didn't anticipate that their advertising tier would be as strong as it is. But now that it is, I'm glad to see, because that means that maybe Google and Meta get some bleed over. And both of those companies are certainly, under pressure. And that would be good across the entire sector. I don't own that. I do own JP Morgan, but I don't own AMSL or Meta or Alphabet at the moment.
Right. Okay. Now, I would be remiss if I let you go without asking you about the biggest news of the day, I guess, is that PPI number that came in much better than expected. PPI is upstream of CPI. That is what, say, Target and Walmart pay to buy the stuff that they put on the shelves to sell to us. We were looking for a 1.1% month-over-month gain in prices. It did gain, but only about 0.5%. What are your thoughts there on inflation?
Well, this is really good because, inflation, as far as I'm concerned, the Ministry of Whitewash produces numbers that are more cooked than a Christmas goose. So if you agree with that assumption, then I think the number is rock solid. I think, we're using Stone Age numbers in sort of a hyperspeed environment, and that's a mix, that's a mismatch. But again, I'll take it because that's what the market looks at. And if it's as good as we think it is on the surface and the revisions stay, off the table, then again, we've got the situation where good news is actually good news.
So if you sum up the day today, am I wrong if I say, hey, we've got some great earnings. They're being revised higher, 15 to 20% is where I'm seeing a lot of research come on. Margins are great. We had a great 173,000 jobs number last Friday or 2 Fridays ago. And we've got some great tax returns. Folks getting a lot more money back from their taxes from the one big, beautiful bill. We've got a PPI number that came in less than half of what it was expected. And we've got gas prices down $5, $7 a gallon or a barrel. Boy, oh boy, it looks like some people might have missed that train. What do you think?
Well, if they didn't miss the train, they've got one last, stop before they can get on again. And that, to me, I think there's probably another kerfuffle or two. But again, the history is very clear on stuff like this. Eventually, the market moves on. And I think today, the last couple days, we're certainly seeing that foundation being put in place.
Always great to have you on. Thanks for taking the time to come on a phoner. We really appreciate it. Always want to hear what you have to say, Keith. Keith Fitz-Gerald, he's a principal market analyst at the Fitz-Gerald Group up in Seattle, Washington. The Sultan of Seattle, by the way. We'll see